FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. I'm Kerry Lutz. It's the second to last day of October. That's October 30th, 2018. As always, please participate in the show. We love hearing from you. I'm only a few dozen emails behind right now. Again, the email address is kl@kerrylutz.com. Well, market has taken quite a slam recently. Is this the beginning of the long anticipated, and I'm talking 10 years, bear market, or is it just a blip on the dial? Well, Avi Gilbert, our good friend, you find him at ElliottWaveTrader.net, is with us now to give his opinion. Avi, welcome back.
Thank you so much for having me back.
Pleasure. So what's happening here? Is this the beginning of the bear market, or is this just a little intermediate downturn correction that will quickly remedy itself?
Well, that all depends on how people define bear market. I don't view it as a bear market per se, and I'll just give you a little bit of background about why I'm saying that. Starting with the consolidation that we had back in 2015 into early 2016, our expectation was that was going to be, from an Elliott Wave parlance perspective, that was a fourth wave within a larger third wave off the 2009 lows. So we were looking for a fifth wave rally to complete a third wave out of 5 off the 2009 lows. So our ideal target region was really at the bottom of it was around 3,011. And we came up about 70 points short of it. But once we were in that 2930, 2940 region, when we were moving up into 2900 to there, I was telling everybody, I think it's time to be very, very cautious now. We're getting very close to our long-term target. And from this region, we're expecting a 20 to 30% correction. So once we broke down below 2880, that was a very strong signal, to me at least, that the potential top for that third wave off the 2009 low may be struck. Once we broke 2880, what was going to tell me was a drop directly to the 2500 to 2600 region, which was our initial target for just the first leg down off that third wave high. And that's basically where we are now. So my general thinking is that, we're now trying to bottom out in what we classify as an A wave of wave 4 off of the 2009 lows. But people shouldn't fret too much because there's going to be a fifth wave to much higher highs, we expect. But right now, market is trying to bottom out in an A wave. From here, we expect the market to see a rally. Our minimal target for the rally is a little bit over 2,800. There's an outside chance we may actually be able to get back up to that 3,000 region. And a lot's going to depend on how the market develops through November. But in either case, I think the probabilities are suggesting that once that next bigger rally peters out, we're looking for the trap door to open down to the 2,200 region.
Mm-hmm. Really? So
and that should ultimately complete this fourth wave of the 5-wave structure off the 2009 lows.
Mm-hmm. And so once that wave is done, what's going to happen next?
Wow, great question. We think that it's probably going to set off a fifth wave with a minimal target of 3,200 in the S&P.
So higher still, huh?
Yes. We're looking still for one more rally, take us out into the early to mid-2020s.
It makes a lot of sense. And we're going to know this shortly. So October, when stuff always happens in October. Why do you think why do you think that's the case? We have so many crashes. The most number of crashes take place in October.
I don't know. People are upset that the summer's over. I don't know. I know I am.
Yeah, well, in Florida here, I'm not. I mean, it's our best time of year coming up. But seriously, is there cyclical? Is it just people get spooked in this month?
Not all Octobers are so bad.
I know.
Sometimes you have very powerful Octobers as a rally. So, I'm not a big believer in this, October voodoo stuff. I mean, if you look back to October 2015, we bottomed in early October, and the first 2 weeks of October gave us one of the strongest rallies we've seen in a very long time. Very so, I'm not a big believer in this, I guess what people call like this voodoo that surrounds this whole cycle perspective. I just think, it just happens at certain times.
Sure. Well, hey, I'm a Cancer, and Cancers aren't superstitious, right?
There you
go. So, market, it's going to keep going higher. What does that mean for other asset classes? Start with precious metals.
Well, precious metals, every chart I review on their own, and I think every market, every different market, really is its own cycle. What we are looking for, and I think we have a very good guidepost right now in the GDX, and I know a lot of people follow the GDX, and I think the GDX is giving us a really good guidepost. As long as the high that we struck last week is held, we think we can drop down to maybe the 15 to 16 region in the GDX and complete a long-term pullback that began at the highs of 2016. So we're, as long as we stay below last week's high, pressure is going to remain down to about the 15 or 16 region. If we should take out last week's high for any reason before we head down to those lower levels, that could very well be an earlier bullish indication than we currently expect. So we're using that last week's high on the GDX as our guidepost as we speak. But ultimately, as long as we hold resistance, we think the GLD can go back down and retest 109 and drop as deep as 105. But we think this last decline, if we're going to get it, will kick off a major rally that will rival what we saw in 2016.
So it could be heading a lot lower, eh?
I don't know about a lot. A lot is all in is in the eye of the beholder. What people view as a lot. Some people view that being a lot. Some people view it as a blip in the longer term chart. It's hard to classify. I would say it's sizable.
So it could be a substantial. Yeah, well, it appears that way. Well, what wave are we in gold? Can you tell us that?
What we are looking at is in the entire complex, we're finishing off a second wave pullback, with the first wave being the rally off the 2015 lows. So when we rallied into 2016, the high we hit in mid-2016 was wave one. And since then, we have been in this corrective machination back and forth of what we're counting as a wave two, that still could drop a bit lower. But the next rally we expect will be wave one of wave three. So the real fireworks for the metals may still be several years out, but we are expecting a sizable rally to strike once this pullback completes.
So it's just a matter of time, really, but what's going to happen is kind of set. So dollar, what do we see happening with the dollar?
To me, the dollar is a big mess, and ever since we, and oddly enough, the dollar for me is a long story. We got long the dollar back in 2011. We started seeing the dollar developing as a rally, with our target being, hold on a second, 103.60. 60, I believe, when we were down in the low 70s.
Mm-hmm.
So, 103.53 was our target back in 2011. And as we know, the dollar struck a high early of 2017 at 103.82. So we were off by a few cents from that long-term perspective. But when the dollar pulled back as deeply as it did from that high, it really has suggested to me that that I think the upside is somewhat limited. And I think we're probably going to see some machinations that could be pointing us back down into the 80 level, the 80 region over the coming years. So the dollar, to me, I'm a little cautious about tracking both sides of the dollar here because we're seeing a lot of mixed messages over the last 2-3 months. But my overall expectation, at least for now, and like I said, I'm still watching it a little more closely, but I think we can head back down to the 80 region on the dollar in the coming years.
Huh. Interesting. And what about oil? What are you thinking there?
Oil, I'm looking for a topping very soon, which should give us a very nice pullback, similar to what we're looking for in the market. I'm looking for another rally that will probably top us out, just like the market, and I think both are going to come down pretty strongly once the next rally peters out. And it should give us, a really nice buying opportunity once that next bigger correction takes hold.
Mm-hmm. So when you see all these stories, fracking and production's up and inventories are up, what runs through your mind?
I'm not a fundamentalist. For me, I don't buy into stories. Oftentimes, it leads people in the wrong direction. Most of the time, most of the stories are most bullish at the highs and most bearish at the lows. So for me, the numbers don't lie. So I pretty much follow the math rather than the stories.
Yeah. So stories, they all get planted anyway. We know that with the current state of today's media. Hey, any other markets that you're following right now that are noteworthy for any reason?
Well, those are probably the biggest ones. I mean, there's still a number of international markets that my guys follow. For example, Brazil still looks somewhat bullish. So there are a number of opportunities out there. But the longer this rally goes on in the overall equity market, the closer we're getting to a what I think could be a much larger bear market than what we saw with the sideways consolidation of 2000 to 2009. I think once we finish off the fifth wave, off the 2009 lows, once we head into the early to mid 2020s, that could usher in as long as a 10 to 20 year bear market. So, I think people should start, considering what they're going to be doing in their retirements and their retirement accounts once we get that final fifth wave rally over the next 3 to 5 years.
Yeah, for sure. So what are you seeing, though? Is the whole market, the world stock markets, because they seem to be interlinked right now to some extent, although the U.S. market's shining while everyone else is going down, or most other markets. Any market's going to prosper in that coming 10 to 20 years?
Well, I know the gold bugs are going to love this, but we see the potential for mining stocks, gold mining stocks and precious metals mining stocks to really shine during that period. But
you're not into gold for the sake of gold. It's just a market to you, right?
For me, I mean, I've always said that, I'm neither bear nor bull. I just want to make money. And, I remember back in 2011, I put out an article that called for a multi-year top in gold when it was going parabolic and everybody was expecting that 2000 was a no-brainer. I put an article that said 1915, when you see it, that potentially will be our top. And it could start a multi-year decline that could point us all the way back down to 1,000. And of course, people thought I was crazy, but up until that point, I was very bullish. And then again, when we came down to about 1,050 or so in 2015, 2015, in the last quarter, I started putting out articles that I'm starting to go in long and strong on mining stocks in that last quarter of 2015. And again, people thought I was crazy because, everybody knew it was going to break down below 1,000. But, for me, I just want to make money. I don't care what the pervasive thought is. I just want to make money, and the numbers don't lie.
Mm-hmm. Yes, that's for sure. They don't lie. So for the next 6 months or so, let's just put it this way, till 2019, we're just looking at kind of more of the same?
For the metals or for the overall equities?
For the overall equities, kind of.
The overall equities, I think the next rally could serve as a sizable top and give us a 30% correction in the market. Mm-hmm. Once you see that major correction taking hold, I wouldn't fear it. I would look at it as a buying opportunity.
Yeah, interesting.
Remember, since 2009, that will be by far the biggest correction we have seen in 9-10 years. Mm-hmm. And people are not used to that anymore. So, it probably will cause a significant amount of fear, but I don't think it should be feared. I think it could be another great buying opportunity.
Yeah, so it goes down 30%, which before this rally, with all of the money printing and everything else, when you were in the midst of big bull market moves, a 30% correction really was ordinary course, regular course of business, wasn't it?
FSN Radio. It's all about what's next.
Egypt is on the verge, once again, becoming a world-renowned gold producer. The Golden Age is being rediscovered. For millennia, ancient Egyptian kingdoms prospered from unparalleled riches. Pharaohs built their empires and flaunted their abundant wealth that was made possible by the country's resource-rich gold deposits. Despite this rich history, modern Egypt remains one of the most underdeveloped gold mining countries in the world. Aton Resources is at the center of the modern Egyptian mining world, diligently working both as the only public exploration company in Egypt today and as the advocate for mining reform with the Egyptian government. However, those that arrive early like Aton will reap the best rewards. Aton's discovery of the legendary Lost Mountain of Gold at Radruin and its current aggressive drilling program there could potentially reap those rewards. Aton Resources is focused on its 100% owned Abu Marawat concession in the Arabian-Nubian Shield, located 200 kilometers north of Centamin Sakari's world-class gold mine. Aton possesses first-mover advantage in the underfollowed jurisdiction of Egypt, which is currently undergoing mining reform. To stay on top of Aton's latest drill results and news, go to atonresources.com. Aton trades on the TSX-V under the ticker AAN and on the OTC under the ticker ANLBF.
The Financial Survival Network. It's all about what's next.
Absolutely it was. But, in today's time, people don't remember that. Very few people really remember what it was like all those years ago. But, in today's time, the market right now is every time we get a 5% pullback, the market just bottomed and ran. 10% has been the max we've seen. So, for people to see 3 times that is going to be very scary. But it really is just something in the normal course of business as we see it.
Mm-hmm. And, okay, so one other thing, and I know it's like a little harder to judge from your vantage point, but real estate, any opinions there?
I actually do not follow real estate. I know one of my guys tracks it, but I really don't watch it very carefully. My family used to be in real estate, but have since divested, and I never had wanted to become a landlord ever since I saw what they went through. So I really don't track it very, very closely. Mm-hmm.
Yeah, I gotcha. Well, I guess if you're tracking it through the market, you might track it through REITs, but there's certain limitations there. But, it's interesting to see the way real estate has gone up since the crash. I guess it really had nowhere to go but up. And now we're getting to new peaks. So probably caution is advised there as well. And finally, if you're Joe Sixpack, you've got money in the market, you've had these phenomenal returns. What do you do as Joe Sixpack?
It's a very good question, and I get asked that all the time. And it really depends on where they sit. For example, I know people that are getting close to retirement, and, when they saw this, and I warned them about it before it happened, but, they kind of looked at me with an eye, and when it finally did crack over the last couple of weeks, they asked me, okay, what do I do? People that are closer to their retirement ages, I think the next rally, they may want to lighten up significantly. And, if they want to get back into the market again on a 20 or 30% correction from there, more power to them. But, on the potential that I could be wrong and that the bear market begins sooner than I had expected, I think people that are closer to retirement really have to be much more protective right now, especially on the next rally that I'd like to see in the market, meaning up to the 2,800 to 3,000 region. I'm not so sure about 3,000, but 2,800 to 2,900, I think they should be looking to lighten up. Anybody who's aggressive, well, you could be trading some of this stuff in and out, or if you have cash on the sideline, get ready to buy on the next pullback, the bigger pullback. It really, to me, it's really a factor of how much do you need the money, how much longer are you looking until you're retiring.
Yeah, which makes total sense. And I guess if you're getting close to retirement, now's not the time to be gambling, getting out of the market when you think it hits its low, and then, or when you think it's starting to go lower, and then jumping back in when you think it reached its bottom. Probably not a conservative strategy for most.
Right.
So, all right. Hey, so just tell us again your website, where we find you at, Avi.
Website is Elliott Wave Trader, 2 L's, 2 T's, ElliottWaveTrader.net. And, you can find our stuff all over the internet. And we have 16 analysts that cover the world, as they say.
All right. Hey, well, terrific. Always great talking with you. Always great getting your perspective. If you've got questions for Avi or myself or anybody else you hear on the show, email us, kl@kerrylutz.com, Twitter feed @KerryLutz, and the Facebook page, Financial Survival Network. Avi, thanks so much for coming on. It's always great.
Thank you so much for having me.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.